What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is August 20th of 2017. So as y'all watch my channel, you probably understand that I do a lot of videos covering coins and tokens that come to market in the cryptocurrency sphere, as well as market trends to try to predict price action and make winning investments for the long term. That being said, from time to time, I love to do videos on very interesting philosophical questions related to cryptocurrency and also alternatives to the banking system as well. And I think this is a perfect niche question that I've heard bounced around and debated about in my community. So I thought I might as well give my opinion on it and try to build a fair analysis on the question. The question we're asking today is Bitcoin versus gold. Which one is a better long-term investment? Whether it be for return on investment in the long term, safety, transactability, I don't know if that's actually a term, but in the sense being easily transferred between individuals. So it's a good question, and I think it's a very fair thing. But the thing I really hate, and I want to emphasize right off the beginning before we get into covering the differences between the two, the pros and the cons, and how you should approach it if you're maybe optimistic on both, I really want to reinforce the idea that I think a lot of people don't realize. This is a very hostile argument that goes on along with the kind of alternative money scene against fiat currency. I really want to reemphasize that, folks, we as a community, whether you're a gold bug or a crypto freak, we're both in the same boat. We both hate the failed monetary policy of the central banking system, whether it be here in the United States with the Federal Reserve or the multiple failed central banks around the globe that have continued failed monetary policy, leading to boom and bust economies, and has really left a disparity of wealth for the working class. I think we all get that. If you're here, whether you're a gold bug or crypto freak, as I stated, you are in the right place, and we're all on the same team in that sense. We might have different approaches to it, but I think we should see eye to eye a little bit and see the benefits of both of our solutions. So that being said, it's not a one-way street. You can like both of them, and I'm going to show you how each have their benefits to them. So that being said, the real reason I wanted to cover this was I saw an article back on April 1st, and I've been meaning to do a video on it on my channel that CoinDesk had posted, asking the question, which is a better long-term bet? And the one thing I didn't like about it was that they really focused on very much on the numbers, and I like that, but they really focused on the return on investment, and I think that's a portion of it. And I'll be fair in the sense that both sides have their benefits outside of return on investment. Now, I honestly think Bitcoin will be a better long-term investment if you want to make a return. However, there are different benefits to each. And I want to go through and cover a few topics before I really go into my slides that I have on the analysis of the pros and cons of each. The big thing I want to talk about, though, outside of this article, and I'll link this one if you want to look down below, as well as the one we're about to jump to, I want to talk about an article that came out on CoinDesk with the big man himself, Peter Schiff. Now, I'm going to say that I have to disagree with a lot of what he says on Bitcoin. That being said, there are no hard feelings. I love Peter Schiff to death. He's one of the few people who called out Wall Street during the housing crisis and the credit bubble. He called out Wall Street for its bullcrap. He also called out the Federal Reserve for failed monetary policy. And he understands the fact that fiat just doesn't have value. And I think he's been in that industry for a while and really gets it. So nonetheless, love the guy. I've been following him since, back in 2011 when I got interested in monetary policy and economics. Really love Peter Schiff. That being said, I think he's missing out on a few things with cryptocurrency. We're going to go mostly through this article. There's also a good video, though, he posted in 2013 that I'll also link as well, because I think it's good to get a few resources to really hear his opinion out. And I get him in the sense of his criticisms. However, I think he's just missing out on a few things. So if you're watching this, Schiff, I don't mean this in any rude way, but I think you'd really, I hope you get something out of my perspective on this. So his first thing he really critiques on, and you'll hear this reinforced in the video that he did for the company he previously worked with, in the fact that Bitcoin isn't money, he says. It's pretty much, and the main reason, to get more specific on that, I think CoinDesk didn't really do a fair job of covering what he meant by that quote, unless you really dive into the paragraph. Basically, what he's stating is money must be a commodity, and what he means by that in a more deeper sense is that it has to be physical to get intrinsic value. So, for example, I can tell you, for example, in the case of gold, gold is something physical. It's tangible. I can hold it. Same with my phone. I can hold this. You can use this for different things. It has value built into it because it's physical, and I can hold it in my hand. And he thinks that at its core, money needs to be something that you can physically see. He doesn't believe in the concept of a digital asset. Now, that's a term that a lot of people might be like, oh, you just kind of threw that term out there. What really is a digital asset? That's a good question, and I think it's a new concept that maybe Schiff might not truly understand because it is something that's relatively new. A digital asset is something, it could be as simple as a text, an image, video, audio, whatever it may be. Bitcoin itself is a digital asset. It is something that is not only used as a means of exchange, but it is a digital commodity. You cannot create it out of thin air. It's exchangeable, and it does have purchasing power added to it because there are intrinsic technological benefits to using it. And the same goes, to put this in a more simple case, if you're having a hard time understanding really what a digital asset can mean, think about something as simple as your personal data. Facebook makes its money not because you pay for the platform, but because of your digital asset, which is your information. Something as simple as your information, your search history, or your activity on the platform can be something worth of value. That's the same with Bitcoin. It's not just created out of thin air. It's done through proof of work. It is a physical, well, it's not physical, but it is a digital commodity that actually has intrinsic value. So that being said, I know it might be hard for Schiff to pick up, and he might have a disagreement. Maybe I'm off a little bit on it as well, to be fair. But I really think that there's a kind of, it's one of the few things where people kind of think in the caveman mindset about Bitcoin and cryptocurrencies, which is what I used to think in, which is this idea of like, oh, no, I can't hold it, so it's not tangible, it's not real. And I think that just because it's not tangible doesn't make it, a false currency or a false asset. So I think he's a little bit off on that, and I think that's one of the failed arguments against Bitcoin. The second thing I will say that he makes a decent case of is there is kind of looming regulation. There's no serious regulation and true definition over what the SEC and a lot of other financial advising, whether it be government or private entities, are going to view Bitcoin as, or other cryptocurrencies. There's been a lot of trouble with the SEC recently with ICOs on the market, or initial coin offerings of new cryptocurrencies coming out into the sphere and raising capital. So that being said, I think that there is some problems with regulation, but we can already see that so long as you report your earnings through Bitcoin, in the sense of paying taxes, the SEC doesn't really have a serious issue with it so far. Now, again, that might be subject to change, but as of now, just like with gold, so long as you return, you write out your returns, if you're trying to cash out on it rather than just holding it, then yeah, if you play by the rules, there's fine regulation in place, and it's seen as a real, investment vehicle. So that being said, we can continue scrolling through the article and stuff like that. I really think that this is a good article to read through. That's why I'm going to put a link down in the description below. However, I think it's good to transact into the simple debate of the pros and the cons of both Bitcoin and gold. So let's go ahead and look at that chart, and let's go ahead through the slides and really look at the benefits of each. All right, so let's jump into the analysis, and first off, look at the pros of gold. You'll see a general trend when you look at the pros of gold within the case and argument of Bitcoin versus gold. And I will say that gold wins in the argument of security and safety. The first being that it's physically mined in the real world, just like any other precious metal and the general sense of commodities. We can see that you have to go through a process to extract gold out of mines, refine it, and distribute it onto markets. It takes effort, it takes time, it takes work. So there is that sense of intrinsic value. There was work put into making it. Not to mention, speaking when we were talking about markets, gold has a world-adopted trend to it. There is so much adoption of gold over the long extension of the global economy. We can see that it's a $7.5 trillion market, and if you want to go somewhere and exchange gold, whether it's your neighbor or something as big as a financial bank or institution, you can transact it. There is someone who usually wants to take gold at the given market price. So there's that flexibility in that sense. And the third point that I really like, and I think this is the big selling point for gold, is unlike a lot of other assets, it's a commodity that is relatively limited in its physical, tangible, and exchangeable by hand. This is a big selling point that Bitcoin, we'll learn later on, does not meet. It is a physical, tangible asset, meaning it's something I can hold. So to really emphasize on that, like I said, it's something like my phone. It's something that's physical. I can use it and I can build value with it. Same with gold as well. Gold is physical. It has properties to it that people from across the world wouldn't mind exchanging for. And in the case of kind of a world apocalyptic scenario, gold is definitely a better thing to have than fiat money because people aren't going to care about your dollars. They might give a chance of caring about gold, however, because it's a limited commodity and has been seen as a use of exchange for centuries across the globe. And that goes back to the world adoption as well. It's been around for a long time as a commodity and as a means of exchange. So that's probably the biggest selling point. That safety and security of gold really gives it a sense of value for the long term. However, there are some cons or some negatives to gold, and I'm going to go through them just as I did with the pros. First off, yearly inflation. Now, you might have not heard the term inflation with gold before. This is something that a lot of gold salesmen won't tell you. It's the one secret they don't want you to know. No, just kidding. But it's the one thing that really I think a lot of people have a misconception about. You know, when a lot of people go towards investing in gold, they usually try to step away from fiat. They're like, I'm tired of the central banks. I'm tired of my money being, devalued due to the increased monetary supply or inflation in simple terms. However, gold has inflation. Though it is, generated and worked for throughout the world, there is a general inflation in the market of around 1 to 2% annually, much like that of U.S. markets and the sense of fiat money inflation rates. So, a little bit of a worry you should always keep in mind with gold. The majority of it most likely has been mined. However, there is still a steady rate of inflation that maintains around 1 to 2%. So keep that in mind. Second is that it is divisible, but it's not easily divisible. A lot of people, talk about Bitcoin being easily, divisible and stuff. We'll get to that more when we look at Bitcoin. And you can do the same with gold. You can, measure it in ounces, in pounds, whatever it may be that you want to exchange it with, or however much you're trying to exchange. The problem is that when you're trying to make multiple exchanges, or even a single exchange with gold, you need to break it down to the amount you want to exchange, and doing that is quite monotonous. Gold is not an easily flexible product. You can't just break it down. You have to actually go through the process of going to someone who can break it down, who can process it, and measure and weigh it to the amount that you want to exchange at the fair market valuation that you agreed on in any given exchange. So, a few issues there related in the sense of divisibility. The third negative is that there's no online transacting. Now, you could own gold futures through an exchange, but that's not owning it as a precious metal. That's not what we're talking about here. And not to mention, let's say the market collapses. You think you're going to get your gold and from your gold futures? Good luck with that. So it's good to hold it as a precious metal. However, there's really no easy way to transact it online. Now, you could probably ship it out to someone, but it's not really as easy as making an instant transaction within a few minutes to a few hours like cryptocurrency can. And the fourth point, this is the big thing I always talk about with gold to people who want to use it as an investment vehicle. Gold should be seen as a safety outlet, not as something to make a return on investment. Even if the world goes to an apocalyptic scenario, and we've had big recessions in the past that really have kind of inched towards that idea, ROI is really poor for gold. Okay, if you're looking at it as an investment vehicle, it's really not there. If you compare it to stock markets and even something as bland and slow as bonds, you make more money in those two markets. It's been historically proven for the past 200 years, you would have made 10, if not 15 times over what you would have made on gold and bonds and stock exchanges. And sometimes the numbers go even higher depending on what assets you're talking about in those markets. So, very poor return in the long term. It's a general safe asset to hold. That's the point to take away. And that's not a negative. Don't take it as me being assaultive towards gold. Safety is very important for a lot of us. And I understand that as someone who's in cryptocurrencies because a lot of people are very safe and secure about their crypto investments. They want security. They want safety. And I think that's a very fair thing to care about. So if that's a big ticket item that you're looking for to have in your investments, gold could be that. All right, so next up, now let's look at the pros and cons of Bitcoin. And starting off with the pros, we have a pretty decent list built up here. Much like gold, and this is how we share that bond together and why I think we need to get along better, there is proof of work, which builds intrinsic value in Bitcoin. Bitcoin is not just created out of thin air. I think that's a big misconception from a lot of people who just got into Bitcoin or cryptocurrencies. They think that Bitcoin can just be popped into thin air. Well, there's a reason there's such a high value to it. It's because there is proof of work behind it. Bitcoin has to be digitally mined, much like you would when you go and mine a gold ore, for example, in a a different kind of procedure, but trying to bring that into the sense of Bitcoin to make it a little more understandable what mining is if you don't know what it is. Mining is where you use the GPU unit, or the graphics processing unit, usually an NVIDIA graphics card or an AMD graphics card, from your computer, and you go about doing complex math equations through a mining pool to generate Bitcoin. And it is distributed equally between the miners who are participating in the pool. So there's that proof of work behind there. It's not just created overnight. It takes work from your GPU. It costs electricity, time, and management. So very important to keep in mind. And on the talk of creating Bitcoin, what's nice is that there's a limited supply. Much like with gold, where it's not just created out of thin air, Bitcoin has to be worked for, and there is a limited finite supply. And this is where it kind of beats out gold. Gold has that that 1 to 2% inflation each year. And there's no telling how much gold there is in the world that still has yet to be mined. However, even though we might have statistics and numbers estimating it, we know for a fact that Bitcoin will never step over 21 million. And that is huge. Not only that, it's going to get harder to mine as well as we move towards that $21 million supply. Right now, there's about around 16 million in circulation. So that only means there's less than 5 million to go around in the sense of newly generated Bitcoin. The third point I want to talk about is that it's transactable online. And what I mean by that is it's easily transferable between you and I and everyone in the world. If I want to send Bitcoin over to someone over in Bangkok, or I want to send some to Russia, or someone in the UK, wherever I may be wanting to send it, so long as they're connected to the blockchain, it's an easy transaction. Now, of course, Bitcoin, I'll be fair, if you're expecting it in a few seconds, Bitcoin can't deliver on that as much as it used to. There have been a lot of other cryptocurrency alternatives that have been able to deliver it in a few seconds to a minute. However, Bitcoin still can send relatively fast transactions compared to bank-based transactions, and also trying to transfer gold across the world, which is a lot more difficult. So they're working on scalability issues and trying to fix that and make it even faster, which is kind of cool how it has that technological advantage to continuously improve. The last point I want to make is a high return on investment. So if you all are looking for an investment vehicle that could 10x over the next few years, meaning it goes up 10 times in value, or maybe even 100 times in value, I know that might be a little bit of a long shot, but if you're looking for that, Bitcoin could be your investment solution. Bitcoin has a lot of room to move up. It's a very early market, and we're going to talk about that, how that can also be seen as a con if you're looking in the case of safety. But if you're looking for an ROI, Bitcoin has been proven to be a good return on investment. Don't believe me? Look at every time someone thought Bitcoin was going to pop at $500 or $1,000 or $2,000, and they said, oh, it's going to be the end for Bitcoin. It just keeps on going to new highs. So you definitely don't want to fall into the trend of, oh, it's ending. That's just a pullback. That's common in markets. The cons, however, do show up in Bitcoin, and I'll be fair, there are a few to keep in mind. The first I want to talk about is the factor of yearly inflation. Now, we know that there's a limited supply in Bitcoin. However, it's still relatively early on in its history. Starting out in 2008, we're sitting in the year of 2017. And though that inflation rate has gone down drastically, it's still at a pretty high rate, around 4%. So you have to keep in mind that there is a pretty high level of Bitcoin being generated per year. However, a good thing to keep in mind if you're curious about how that inflation rate is going to drop with the difficulty increase, it's estimated around 2025 that Bitcoin creation, or at least inflation, is going to be down below 1%. So it's going to be able to beat out gold in that sense of inflation. The second point I want to bring up is early adoption. Now, as earlier I was saying, if you're looking for a return on investment, it's seen as a benefit that this is early. However, to a lot of people who are looking for safety and security, much like I think you'd be better off with in the sense of gold, I think that early adoption can be really a big warning sign and red flag for those of you who might be interested in Bitcoin. It is very early on. It's a very high-risk market. There hasn't been mass world adoption yet like gold, so I can go to every single corner of the world and mention Bitcoin as a means of transaction. There's a lot of people who still don't know what it is, so it's an early market. That's a problem with Bitcoin if you're looking for stableness and security. The third point I want to talk about is lack of tangibility. You can't hold Bitcoin. I can't hold a single Bitcoin in my hand, whereas I can hold my bar of gold or my ounces of gold. That's a big problem for a lot of people. A lot of people like to hold tangible assets and commodities, and that's why gold is a preferable choice. And this also leads to the last point. If the world were to go to some doomsday scenario, if everything were to, really just absolutely hit the apocalypse scenario that everyone's been dreaming was going to happen in the next 5 to 10 years or was calling for, then in that case, if the internet went offline, your cryptocurrency is no good. That's one fair point that gold has definitely beaten Bitcoin on, is that seeing as it's not tangible, it's not physical, if the internet goes offline, you can't connect to the blockchain. Sorry, your Bitcoin's not worth anything at that point. That being said, I will say this, even though I was being pretty highly critical of it right there, and the whole kind of sense, the lack of tangibility, I think if you remove the internet, I don't care if it's the world apocalypse or it's the government trying to censor you from the internet, if anyone were to try to take away the internet from the general public, I think we all understand without 20 minutes of our cat videos and social media, we get pretty antsy, and we'd be speaking up about it, and probably for once have a revolution in the streets. So I wouldn't bet on that being a good argument against it. So that being said, I know this video has probably been long. It's been a very philosophical approach, but I want to take a fair assumption on both of the takes that we discussed on today. Start off with gold. I wrote a good piece on it as well as Bitcoin, and I think these really sum up their benefits. Gold stands out due to its tangibility and long history. If you're looking for slow yet consistent returns in the long run on your investment, gold can provide it. With a limited supply, this precious metal can serve as a fine hedge against fiat currency. And I truly believe that. I understand where people like Schiff are coming from in the sense of defending gold. I think that it does have its potential. Though it's not the highest returning asset, it solidifies that value. And I think that that's good comparative to fiat currency. However, I will have to say, and there's a little bit of bias coming from me doing a cryptocurrency channel, in the end, I have to pick Bitcoin as my favorite. Bitcoin, in my mind, is the gold of the 21st century. Though its lack of tangibility, its ease of transfer, divisibility, security, and limited supply make it a pinnacle example of both cryptocurrency and the future of digital assets. I really think that Bitcoin is going to be the digital gold of this era. And I want to leave you off with a kind of a consensus on this, because I understand that a lot of you are like, okay, well, what side do I choose? I want to tell y'all, folks, I think that there's no problem investing in a little bit of both. If you see optimism in both, if you want to just step away from fiat currency, you're already on the right move. But if you really want to mitigate your risk profile, yet at the same time get maybe a potential higher return on some of your investment, do a 50-50 approach. 50% in gold, 50% in cryptocurrency, on the sense of your non-fiat investments. So, that being said, I'd love to hear what you all think in the comments below. If I did miss something, I apologize, and I'd love for you guys to have a debate in the comments, talking with one another, and, sharing your opinions on things. I think this is a pretty controversial issue, but at the same time, I don't think it has to be. I think it could be something we can just talk about and debate on and learn from one another, and hopefully help each other in the long term of safety of our investments and then also the return of them. So, that being said, that's the consensus and the coverage on the argument of Bitcoin versus gold. I hope you all appreciated the video. If you guys liked it, please give it a thumbs up and potentially subscribe to the channel if you haven't. That being said, if you've got a coin or topic you want me to cover, leave it down in the comments below. But until then, I will see you all in the next video. Stay tuned.